Okay, fellow traders, so you want to trade, but you do not have time. Okay, maybe you have a full-time job and day trading is not for you. Okay, so if that's you, then you want to be sure to watch this video, because in today's video I will show you 3 effective swing trading strategies that work. Okay, these swing trading strategies don't take a lot of time. Okay, it doesn't require you to stare at chart the whole day. Okay, in fact, one of these trading strategy is what I call a set and forget. Okay, meaning that you just set the trade in, and if it works, you make money. If it loses, you lose money. Okay, there is no trade management involved, and it's just a set it and forget it. Okay, so what are you going to learn in today's video? Let's get to it. Okay, so in today's video, I'll give you a definition of what swing trading is first. Then I will go to each of these strategies, which I will show you, okay, with some examples. Okay, I'll show you how do you do it with trend setup. Okay, how do you do range trading, and how do you do the trend reversal, which is a very advanced method of swing trading, but it's highly profitable if you can get it right. Okay, so that's more for advanced people. Okay, so in this video we have something for everyone. Whether you're a beginner, which is you should start off with the trend setup, or if you're advanced, you've been trading for some time and you are profitable, then you want to look at the trend reversal setup. Okay, and lastly, if you stick to the end, I have a bonus tip for you on how to maximize your profits. Okay, basically this tip will show you how to throw your stop loss so that you are able to maximize the profits that you get from a trade, right, if the market moves in your direction. Okay, so let's get into today's video. So what is swing trading? Okay, there are a lot of definitions of what swing trading is. Okay, and this video is not meant to debate about what swing trading is, but this portion of the video is just to just give you an introduction about what it is, and also establish what swing trading means to me, right, so that we are on the same page. Okay, so to me, swing trading is very simple. You are just trying to find the major turning point, okay? And you want to exit before price retraces. Okay, so what do I mean is that, let's say you buy over here, okay? You want to exit somewhere here, okay? You do not want to buy when price goes up, then you don't take your profit, then you sit through the retracement and then you hold it, you go up, you still hold it. Okay, that to me is not swing trading. That to me is more of position trading. Okay, because you want to be exiting when you see that price about to retrace. Okay, so swing trading means that you just want to catch the major turning points. Okay, the major swing. Okay, anything in between, like this this region over here, this small retracement, there is a mini trend here, right? You have a down, up, down, down, up, down, right? So all these kind of small movements, you are not interested. You just want to catch this big one here. You want to catch this big one here, okay? And when you see that price is about to retrace, you exit, because in a swing trading strategy, you do not want to sit through the retracement, okay? Because you can always enter again. Okay, now I'm not saying that my definition of swing trading is correct. There is no such thing as correct, but I'm just saying that in this video, I just want to show you how do you catch the major swings and exit before price retraces. Okay, because personally, I do not like to sit through this retracement over here. Okay, so assuming that you entered here, okay, I do not like to see my profits retrace so much. My big profits turn into small profits. Okay, I do not like it. I prefer to enter here, exit somewhere here, and then when price comes down, I buy again. Okay, that's just my personal style. Doesn't mean it have to be something adopt, but just for this video, let's stick to this definition. Okay, so that's what swing trading is, and it's perfect for you if you are just starting out and you do not have much time. Okay, it's less stressful because you do not have to stare at the charts the entire day, and it allows you to trade even if you have a full-time job, and just check the charts a few times a day. Okay, so let's talk about the first proven strategy that works. Okay, this is a very textbook example. Okay, it's called the with trend setup. It's a very simple strategy. Okay, in fact, I think I covered this in the 3-day trading guide. So I have a 3-day trading guide for you, and the links in the description. So make sure you download that. If you have not, if you are new to this channel, please give us a thumbs up. Okay, please help us like this video. Subscribe to this channel, because we are trying to help more traders like you. Okay, and if you like this video, then YouTube will show this video to more people, and we can help change more lives. Okay, so that's the purpose of creating videos like this. Okay, so back to this, with trend setups, it involves 3 basic steps. Okay, the first one is you want to identify trend. Okay, trend is just looking at a series of higher highs of higher lows. Okay, or in a bearish trend will be a lower lows and lower highs. Okay, again, this is taught in the 3-day trading guide, so make sure you check that out. So in this case, we have a uptrend because you have a high, you have a low, you have a higher high, you have a higher low, and you have a higher high. Okay, so very clear-cut uptrend. Okay, then you want to identify the key support and resistance level. Okay, in this case, it's this level here. Okay, let me show you. Let me just draw it out in case you cannot see it properly. You have a up, down, up. Price comes back down. Look left. You have a resistance, turn support, and more importantly, you also have the trend line. Okay, so you are just buying, just looking for a trend, just looking for price to retrace to a support level, and just buy. Okay, and in a with trend setup, ideally you want to start locking in your profits at the recent high. Okay, over here. Okay, or this candle high over here. Okay, so very simple setup. Okay, honestly, there's nothing much to talk about this. If you are new to trading, right? If you are new, definitely start off here because this is the most beginner friendly already. You trade the trends, you just look for price to retrace to a key support resistance level, and then you look for a price action trigger. Okay, again, all this has been taught in a 3-day trading guide. I do not want to go through what's already taught in a 3-day trading guide, but I just want to quickly touch on this setup. Okay, because it's the easiest setup. Okay, if you are struggling, this is the setup that you should start focusing on. Okay, so that is the first trading strategy. That's the first swing trading strategy. Let's talk about the second swing trading strategy, which is a range trading. Okay, now in this strategy, as the name suggests, range, you want to buy low, you want to sell high. Okay, so three steps or so. The first step is you want to identify the trading range. So in this case, we have dollar yen. Okay, and I identified this entire trading range for you. Okay, so in this trading kind of strategy, you want to buy low, you want to sell high. Okay, so if you notice that you're at the bottom of the range, then you want to buy it up. Okay, if you're at the top, you want to sell it down. Okay, so this sounds very simple, but I see a lot of people do it wrongly. Okay, so what do I mean by do it wrongly? Okay, so let me just draw it out for you. Okay, so you have a range here. Okay, in a range, the price action is very choppy. Okay, means it will just go up, go down, go up, go down. So you will not get a very nice fast movement like in a trend trade or in a momentum trade. So what happens is that I see a lot of traders, you know, when they come down, right, they buy. Okay, they buy somewhere here, which is fine. They put their stop loss below. Okay, so you know, price goes up in their way. Okay, and you know, they get excited, and you know, price start to retrace, is up, down, right? Because you're in a range trading scenario. Okay, what happens is that a lot of traders, because you know, it comes back down, they exit at a small profit. Okay, because you know, they see their profit go into their decent profit go into small profit, they take profit. Okay, what happens is that price does this, and finally hits the target. Okay, so why does this happen? Okay, this happens because in a range trading scenario, the market is choppy. Okay, so things are going to take time. Okay, so if you do decide to trade the range, you know, this as your swing trading strategy, then what you want to do is you want to deploy what I call a set and forget method. Okay, what's a set and forget method? If you enter here and you have your stop loss here, okay, there are only 2 outcomes. Okay, you either profit. Okay, you either profit or you lose money. Okay, so you just set in your take profit, which will be the upper end of the range, and you put your stop loss and you forget about it. Okay, because honestly, price is too choppy. If you start monitoring trades, it goes up, goes down. There's no way you're going to get a good risk to reward. Okay, so this is a mistake I see a lot of traders make. When they trade ranges, they do not understand that the price is going to be choppy. It's not going to be easy, and they exit too early. Okay, so what happens is that if let's say here you enter here and you exit here is actually a stop loss of 30 pips and your reward is 100 pips. Most people, they probably exit at, you know, like maybe at a 15 pip profit. Okay, because they see price goes up, it comes back down, and they are unable to see through the volatility. Okay, so this is very important, right? Psychologically, if you decide to go with this trading strategy, this swing trading strategy, then learn to deploy a set and forget method, where if you enter here, let's say, and you put a stop loss, you put a take profit here, there are only two outcomes: either price hits your take profit or price stops you out. Okay, there is no early exit, there is no break-even trades. Okay, so this is what I recommend. Okay, so in this case, this case study here, if you entered here and you do your you take profit here at the top, you would have gotten a nice risk to reward, probably at least 1:3. Okay, in this case, if you entered here and your take profit was here, you would have missed your take profit and you would have lost money. Okay, but that's fine, because this is range trading. Okay, you want to buy at the bottom and you want to sell at the top, and if you do this consistently, you should be profitable, because the risk to reward is really great. Okay, but you want to avoid the mistake of doing something like this, which is you prematurely exit your position because you cannot stand the up down up down up down. Okay, so range trading has to be something that if you choose to do, just set it and forget it. Okay, in fact, it's good for you if you are working and you cannot stare at the charts much, and you just like to put in a trade and forget about it. Okay, then this strategy is perfect for you. Okay, so now let's move on to the final strategy that is very profitable if you do it correctly. Okay, but a word of caution to you is that this is more advanced. Okay, if you are struggling, you're still new, maybe you've been trading for 3 months, 5 months, 1 year, you want to avoid this. Okay, you can study this concept, but please do not attempt this until you are proficient in trading. Okay, so you probably know that the market moves in series of stages. Okay, so what happens is, let's say you have an uptrend. Okay, and after uptrend, you have a consolidation here. And after the consolidation, what I also call the distribution phase. And after the distribution phase, the market starts to reverse. Okay, so this trend reversal swing trading strategy involves trying to catch the trend reversal somewhere here. Okay, because when you catch the reversal, you are essentially catching the start of a brand new trend. Okay, so when you have a brand new trend, the market has the potential to move in a huge way, because you are just catching the start. Okay, versus if, let's say, you catch a trend continuation trade somewhere here. Okay, when the trend has already been established, the amount of pips you can make is lesser compared to if you catch a brand new trend. Okay, a trend that has just started. Okay, if you can catch it low or you can catch it high, then your potential to make a lot of money is really there. Okay, but it's very difficult to catch a brand new trend. Okay, but nonetheless, I'll show you how to do it. Okay, so there are actually two patterns. Okay, I have the bearish example and then I have the bullish example. Okay, I will give you a case study after this slide. Okay, I'll show you in the charts how it looks like. Okay, but this is the brief pattern that you want to look at. Okay, let me just break down this pattern for you. Okay, so let's start with the bearish example over here. Okay, so in a bearish example, you have a uptrend and then you have the trend reversal, meaning that price has been trending up for some time and you are trying to sell it down. Right, you are trying to predict the top, right? So it's very profitable if you get it right, because you are predicting the market top. Okay, so how do you do it is that you want to look for price. Okay, in this case, price. You have a high here, you have a low, you have a high. Okay, you want price to make a lower, a low that is lower than this swing point here, than this low here. Okay, so basically you want to see that there's a change in a pattern from a series of higher highs to higher lows to you want to have a lower low. Okay, so after this high here, it becomes a lower low. Okay, so this is your telltale sign that the trend is about to reverse. Okay, so what you want to also see is that you want to see that there's a trend line, ascending trend line that is broken. Okay, it's broken and this low is being violated. Okay, and then you want to catch it over here. Okay, you want to catch it over here. So this level here is also parallel. It's also the horizontal level of this this swing high here. Okay, so if you are more advanced, you realize that this is actually a head and shoulder pattern with this as the left shoulder. Okay, this is the head and this is the right shoulder. Okay, so it is essentially the head and shoulder pattern. Okay, the only difference is that you are waiting for price to come to make a lower low, as well as you're looking for a trend line confluence, and then you take the trade somewhere here with a price action trigger. Okay, So that's the bearish example. Now let's talk about the bullish example. It's the same thing. Price has been trending down. You are looking to pick a market bottom. Okay, if you're able to do it well, then you are going to get a very nice upward movement, and you can profit. You can get a very big trade if you catch it. Okay, so same thing. Price is going down. You have a low, you have a high, you have a lower low. Okay, but what happens is that price, instead of doing a lower, a lower low and lower high and lower low, it does a higher high. Okay, you realize that this high here is higher than this high here. Okay, so when you see this is a sign that the trend is going to reverse. Okay, so you just wait for price to come back down. Okay, of course, make sure that the trend line is broken and there is confluence between the trend line, the broken trend line, retested. Okay, it's going to be retested, and you have the horizontal level, which is the left shoulder. Okay, this is the left shoulder, this is the head, and this is the right shoulder. Okay, so essentially you are trying to capture the right shoulder of a head and shoulder pattern. Okay, whether it is the bearish example or the bullish example, the idea is the same. Okay, you want to swing trade. Okay, you want to catch the right shoulder. Okay, and you want the confluence of the trend line that has been broken and retested together with the left shoulder acting as the support or resistance. Okay, so let me show you the example. Okay, so in this case is the bullish example. Okay, if you look at this, you have the left shoulder, you have the head, and then you have the right shoulder. Okay, you also have this trend line which was broken. Okay, it was broken and it's retested. Okay, so if you can get it here, okay, and you put your stop loss maybe below the left shoulder, right, you have a very nice move up. Okay, so this is a very highly profitable trade setup if you can get it right, because your risk to reward will be very good because you are catching the start of a brand new trend. Okay, so this is the bullish example. Let me show you the bearish example. Okay, so this is the bearish example over here. You have your left shoulder, you have the head, and then you have the right shoulder. Okay, in this case, you have your trend line as well. This is your trend line up. Okay, let me just delete everything. Okay, so if you can buy it sell it somewhere here with the trend line acting as a resistance together with the left shoulder as a resistance, then you would have gotten a very nice trade. Okay, so this is a very good setup. Okay, again, I want to reiterate that this is a trend reversal setup, so it's not for everyone, it's for someone who's more experienced. Okay, so let's go on to the last part. Okay, if you stay till the end, I want to show you how to maximize your profits. Okay, so basically, how do you maximize your profits is that you want to be able to ride a trend when there is a trend. Okay, so this only works if you are trying to do either this or this. Let me show it to you. Okay, this works only if you are trying to capture with trend setups, or you are doing the trend reversal. Okay, this does not work in a range trading, because in range trading, you're just trying to buy low and sell high. Okay, you're not trying to ride a trend. Okay, so in this bonus tip I have for you, what you want to do is you want to use a Fibonacci extension tool. Okay, now if you do not know what's the Fibonacci extension tool, I have another video for you. Okay, the link, I will put the link, or I'll put it on the top right. Okay, so that you can click on it and watch it after this video. But basically, how you use it is that you just want to connect the swing high and the swing low. Okay, so in this case, I'll connect it here and here. Okay, and then I'll get the Fibonacci extension level, which is this level here and this level here. Okay, so what you want to do is that when price hits the your swing low, okay, a lot of people, most of the time, they exit. Okay, but if you want to ride the trend, what you can do is you can shift your stop loss to break even first. Okay, and then when price hits the 1.272 level, you can shift your stop loss to be above the recent swing low. Okay, and when price hits the 1.618 level, then you want to shift your stop loss above the 1.272. Okay, so basically you are trying to trail your stop loss. Okay, as price moves in your direction, you are trailing the stop loss. Okay, so in this case, it's the same example as the previous slide. Okay, so assuming that you enter over here, somewhere here. Okay, when price hits the recent swing low, okay, you're going to shift the break even. When price hits this level, you're going to shift it to somewhere here. Okay, and when price hits here, you're going to shift it to somewhere above here. Okay, so in this case, you would have exited this trade somewhere here versus just exiting here. Okay, so that's how you maximize your profit. Of course, if price carry on moving in your direction, you can carry on using the Fibonacci extension tool. Just draw, maybe use the connect this swing high to this swing low, and start projecting your Fibonacci extension level, and just rinse and repeat the process. Okay, so again, I reiterate that this is only to be used with trend setup as well as the trend reversal. Please do not use this in a ranging scenario. Okay. So that's it for this video. Just a recap. Okay, I talk about what swing trading is, where you are trying to capture the big movements. You're not interested in the small movements, in between the trading path, in the swings. You just want to catch the major turning points. Okay, so talk you through three trading strategies, which is the with trend setups. Okay, that you should be focusing on if you are a beginner. I talk about okay, sorry, that one is not updated, but I talk about the range trading, and I talk about the trend reversal. Okay, so that's it for this video. If you have any questions about any of these trading strategies, please leave a comment down below. Please just write into us, right? We're happy to help, so just let us know. Okay, if not, thanks for watching. Make sure you hit the subscribe button. If not, I'll see you in the next video.
But if I lay down and I play dead